Hey everybody, it's me, Gregory Mannarino. How are you today? It is Tuesday, March 20th, 2018. We have to talk, you and me. Seriously. There's something going on that, again, we have to pay attention to. It's more important than what's happening to the Dow Jones Industrial Average, because that's all you're going to hear out of the mouths right now, the Confederacy of Dunces, because they're all very gleeful right now. As I am doing this video blog, stocks are higher. The Dow Jones Industrial Average is up 120 something points after being down 400 points yesterday, so they're happy. But what they're not telling you is the bond market right now is bleeding, and it's bleeding hard. If you are not watching this video on my website, you need to have a look at this. They do not want you to see this, believe me. If you're on my website, again, there's a link in the description of this video. I really hope you're watching these videos on my website, seriously. Everything is there for you. Anyway, glance over at the bond market chart. You will see it is bleeding big time. Now, what does that mean? If bonds are selling off, rates are going to spike, and they're already higher. The 10-year is 2.87, I believe, right now. The market does not like rates going up. You know that. Suppressed rates have been keeping this market moving in one direction, and we will get the opposite. If rates continue to rise, stocks will fall. Now, today is the first day of the Fed's two-day meeting, like they already don't know what they're going to do. It's a joke, okay? It's part of the show that you and I watch every single day. But tomorrow, we're going to hear some kind of utterances from its mouth, it being the Federal Reserve, Powell. And look, it's no secret. You know it and I know it. This market is looking for another hit of drugs. It's the only thing that's keeping it up. Suppressed rates now for an entire decade are the only thing is the driving force behind what is going on in the markets. The market does not like rates rising. The sell-off in bonds today is causing rates to spike now. If the market doesn't hear what it wants, I'm talking about the bond market here. The bond market doesn't hear what it wants to hear. There's the potential for a substantial sell-off in bonds to occur. If we get this sell-off, if Powell doesn't word this correctly, or the market, interprets this a certain way, we could experience a very rapid sell-off in bonds. If this occurs, again, put it together. Bonds sell off, rates spike, pressure on stocks. You got it? Very simple set of dynamics here. So we need to watch that bond market chart. Again, please take advantage of the charts on my website, especially that bond market chart today. Go look at it. Your eyeballs will explode. Well, let's hope that doesn't happen. But seriously, you're going to go, whoa, what is going on here? Because you won't see this. They will. The Confederacy of Dunces, all they want you to know right now is stocks are higher. Oh, the Dow Jones Industrial Average is up triple digits. Yay! That's what they want you to know. They don't want you to know anything that's lurking behind it, or how there's a potential here for there to be, I don't want to overstate this, I guess, but a substantial sell-off in the bond market depending on what comes out of its mouth tomorrow. That's all it is. It's an entity, the Federal Reserve, that has big problems lying in front of it. And unfortunately, they're going to try to make you and me pay for it all. All right, with that said, we will sum this up at the end of the day. Let me know what you think of that bond market chart and this whole thing I've covered in this video with regard to a potential sell-off in bonds. All right, that's it. See you later.